When two banks merge, what does that mean for you and your money? We'll discuss next on Smart Money. Welcome to Smart Money. I'm Pat Boyle along with Julia Anderson. We're happy you're here to join us today. We're also very happy that Chanel Bessette from NerdWallet is here to talk with us about bank mergers. Thanks for being with us, Chanel. Before we dive right into the issue of bank mergers, we want to get an idea of what's your sense of the current bank industry climate post-COVID. Has COVID changed just about everything?
So the banking industry was already heading towards a more online friendly kind of format. A lot of people, were using mobile banking apps and broad ATM networks. But as COVID hit, a lot of folks didn't want to go inside bank branches. So a lot of banks started adapting and improving their mobile apps and making other services available like online chat or phone customer service more accessible. So that was already one direction the banking industry was headed. And also, interest rates have been pretty low the last couple of years, but we're starting to see things bounce back as the Fed is changing the federal funds rate and as the economy is kind of getting back on track to pre-COVID times.
You mentioned interest rates. Yes, they are going up. The Federal Reserve says they're going to keep going up as we try and get the inflation thing under control. So I know it's a yin-yang thing for banking. You know, on one hand, they get to charge more interest on savings accounts or actually on loans, but on the other hand, they have to pay out more for safety deposits. So what's the interest rate increase going to do to banking?
Yeah, you hit the nail on the head. As interest rates go up, it affects not only loans, so mortgages, auto loans, personal loans, things like that, but it also makes deposit accounts go up. So actually, we've been keeping a close eye on what's been happening with checking, savings, and certificates of deposit. And we're actually seeing really big increases over the past couple of months. And we anticipate that if the federal interest rate keeps going up, that that'll continue throughout the rest of the year.
So I'll be looking for new opportunities with certificates of deposit. Is that right, for my cash?
Yeah, certificates of deposit struggled a bit in the last few years, but they definitely seem to be a more viable option than they had been in recent memory.
Yeah, okay.
I think there were 200 bank mergers in the last year, something worth more than $77 billion. Umpqua Bank merged with Columbia. U.S. Bank merged with Union Bank. Who comes out on top? The bank, the customer, who wins?
Ideally, it's a win-win situation. So when banks merge, they're able to offer a lot more financial services and products just because they're able to expand their business and gain more customers, potentially offer higher interest rates. And then from the bank perspective, they gain more customers, which makes their company more valuable. Of course, there are sometimes struggles when it comes to transitions and technology changes. There have been like some unsuccessful mergers. So Simple, for example, I know was a big bank up in your area in Portland. They were acquired and it was a pretty bumpy transition. A lot of services were kind of cut loose and customers were not happy about that. But that seems to be more of a rarity. Mergers in general seem to be good for both banks and consumers.
So if you're a consumer and your bank merges, they may or may not tell you what that means, right? And so if you're paying attention, what should you be looking for as a consumer from a merger? What should you be checking on?
Yeah, typically it's good to stay patient. There's always going to be some kind of transitionary bumps that are going to happen along the way. Usually the new bank that's sort of whether the bank is coming out with a new name or whether one bank is being acquired by another, customers are likely going to start receiving communication from the bank about what their new account setup will be. And they might receive a new debit card in the mail. They might get some new paperwork they have to fill out. So just keeping an eye on those things, that's the initial step. And usually just being patient and seeing how things shake out is a really good idea because things stabilize after a merger.
What if the merger happens and you as a customer aren't happy and you want to look elsewhere? What's most important to keep in mind as you shop around?
Yeah, over at NerdWallet, we really care about comparison shopping. Even if you're happy with your bank, it's just good to see what else is out there, especially as interest rates have been going up and as a lot of banks have been changing their overdraft policies, for example, and reducing or eliminating fees or creating, basically like lines of credit that allow you to overdraft a certain amount without any real penalties. So things like that are changing all the time in the industry. So after a merger, it's a good idea to just keep your pulse on what's happening. Comparison shop, look at interest rates, look at new products and services that could be being offered by other banks.
So you mentioned overdrafts, and that has been a political issue actually in the last year, with a lot of banks dropping the overdraft charge because they particularly felt that it affected minorities and lower income people. So what's the latest? Are a lot of banks forgetting about overdraft charges?
Yeah, we've been keeping tabs on it. We have kind of a running list that we publish on a regular basis as we hear about new banks that have dropped or eliminated their overdrafts. And it's just great for consumers because overdraft fees tend to sort of kick you while you're down. You might not be paying attention to your balance as much, and then suddenly you're hit with these massive fees, some of which can be charged multiple times a day. So it's great that a lot of banks have been trying to remove those fees and, or at least make them more flexible for people to have them reimbursed if it's, a once in a blue moon kind of issue for them.
Yeah, I may have accrued a few of those while I was in college. Like, oh, I ran out of money? Okay. I wanted to get your sense. Do you think customers prefer the in-person banking as opposed to the online, or is it a generational thing? I mean, who wants to see a real person and talk to them about their money?
I think it's become a lot more user-friendly to use the kind of technologies that banks have. So people can deposit checks from their mobile apps. They can, just hit up an ATM if they need to deposit or withdraw cash. There isn't as much of a reason to have to see a teller in person. But every once in a while, there might be an issue where seeing a person, in the flesh can be like really beneficial. Like if you're working through a mortgage or something like that. So, generationally, it kind of seems to be a mix. There are the digital natives, millennials, Gen Z, even Gen X. They're all like very comfortable with technology. But, older folks are too. Like older folks have smartphones and they are able to like access a lot of these things. So it kind of comes down to what's most convenient for the consumer. And banks are trying to make things a lot more convenient, even without coming into branches.
Yeah, I will say I never thought I'd be on my kitchen counter taking a picture of a check front and back and, oh, wait, I got to make sure, technology has marched on. And in this case, I've marched with it. So feeling good about that.
I still don't know how they do that. It's magic, but it happens. So, well, I guess I'm interested in what's ahead for the industry. Banks have gone through a lot of turmoil in the last 10 years. We had the Great Recession, 2009, 2010, and interest rates have been down for a long, long time, and now we see the interest rate turnaround. What's ahead for the industry, and are they going to be able to stay where they are? Or to me, it looks like you're either going to have to get bigger or stay really small. What's your take on that?
Yeah, so in the immediate future, as I mentioned, interest rates have been increasing. We anticipate that they will continue to increase, although nobody has a magic ball to be able to say that for sure. But beyond that, competition has been increasing a ton, especially as online banks become more accessible and more of them, released to the public. So just keeping an eye on what's available is really valuable for consumers because a lot of the competition between banks, they're trying to differentiate themselves. And so they might offer some really outstanding interest rates or other features that could make them, a big player. And you don't necessarily need to be a traditional brick and mortar bank to be successful in banking anymore.
Well, thank you so much for being with us today. She is Chanel Bessette from NerdWallet. We appreciate you being here and hope you'll come back and see us again.
Yes, thank you so much.
Thanks so much.
Bye.
For more information, go to my website at 60andsingle.com.